everybody. We're getting ready to take a look at the S&P 500 as we get ready to trade September week 4, starting with Monday, September 20th. We're starting off with a look at the 5-minute chart. Over in the left-hand side of the screen, you can see here was Wednesday's high, and this orange line is a price level where the 20-day simple moving average was as of Friday. It was a little bit lower on Wednesday. Wednesday's high came right up to it and failed. Thursday's high came right up to it once again and failed against not only Wednesday's high, but against the 20-day simple moving average. And then on Friday, with monthly OpX, we gapped down open and sold right on off down to the 50-day simple moving average. This is a hand-placed price level. This is where the 50-day simple moving average was when we came in contact with it on Friday. And you can see that our initial lows took a look below it and tried to stabilize and move back up, but then this nice big sell program came in the afternoon or around 1 o'clock Eastern, and we fell down below the 50-day, and this time only took a little look above it and then failed, falling down to a new September low. The low of the day on Friday is our current September low at 44.2776. Tried to make some moves back up, but these moves back up only took a look above and failed. And then finally you can see we closed the week off, the day and the week off below the 50-day simple moving average. Now, with that, you would think that is, an incredibly bearish thing, but I'm going to show you on the daily chart, the one that I introduced on Friday and began to explain, but I'm going to explain it a little further now in this video. We wound up closing the week off below the 50-day simple moving average. But underneath the surface, look at this rising RSI underneath us. So a falling price with a rising RSI usually indicates that there are buyers underneath the surface buying these lows and supporting the market because there is relative strength below us. And in turn, when we're having rallies that are on falling RSI, that is a bearish signal. That is sellers selling into those highs. So keep that in mind. We did have a nice uptrend in the RSI on Friday underneath a falling price, and that's usually a bullish sign. Here is that quote-unquote simplified daily chart. I introduced this backed out version of it on Friday to show you what has happened in the past when we've closed below the 50-day simple moving average, or when we've even so much as moved down to it. Here was a move down to it, a poke through it, and reverse at the July low. That brought in the buyers, and a nice big bounce ensued. Back here at the June low, we saw a Friday close below it, and what happened the next day? A gap up, open, and go. Though it only lasted a couple of days and was met by a little bit of sideways action, on the third day thereafter, there was a gap up, open, and go. Then it led to a new all-time high. I apologize for my grandfather clock going off in the background. Here was the move down into the May low, followed by a bounce. This just looked at, kind of touched the 50-day and followed by a bounce. Here was a look below it and a bounce that ensued for several weeks. And then here was a Thursday close at the March low, and this was our biggest sell-off of the year. This one in March. We explained this in the last video. This was a 6% sell-off. That's as big as we've gotten so far this year, and that's what all these blue boxes are, is a measurement of this same move that happened. And you can see that we've nowhere near come close to it yet. So we might not be done with the selling, but these moves against the 50 days show us that we usually get a huge bounce. And then finally here was another Friday close below it, and this was met by a huge move up. So these Friday closes below it have been an opportunity to buy that dip into the close on that Friday and get a gap up, open, and go on Monday. And once again, a Friday close here, gap up, open, and go on Monday. And all these interactions with the 50-day have been chances to buy. If that doesn't happen with this one, that is going to be a big trend change. And then maybe we are going to get the rest of this move to follow through all the way down the 100-day simple moving average to the low 4300s, or maybe even as far as going into the 4200s to match the percentage that this move was of 6% back here at the beginning of the year. Now that 6% move would take us a lot lower because we'd be coming 6% off of 4,500 versus where we were back here at the beginning of the year when that 6% came off. But that's not the subject of this video. The subject of this video is this move to the 50-day, which I think is going to be a buying opportunity, and I put my money where my mouth was. As posted on Friday, right after the close, I bought some 4,500 calls, 9/24 next Friday expiration. Here is our roadmap. Here you can see, here was our close Friday below the 50-day. Here was our new September low. Also, we get a new all-time high set on Friday's open versus the August settlement, monthly settlement, which was the previous all-time high of 44.12. Our settlement price this time around was 44.64 and change. But interesting this time around, and maybe this is also going to show us the oversoldness of where we are at right now, is that our open was well above where the settlement price was. Lately, we've been getting just the opposite, a settlement that's much higher than where the open is. You can see here's where the S&P 500 opened on Friday, and here's where set was, all the way down at 44.46. What we are looking for to prove to us that this was the buying opportunity is that we want to obviously hold Friday's low. We want to gap up open above the 50-day or at least right on it and go. And we want to see Friday's high get taken out. On Monday, the 10-day simple moving average is probably going to be right down here near Friday's high. We want to see that move up through the 10-day simple moving average, maybe close above it on Monday, and then maybe we can follow through on Tuesday, all the way up to the 20-day. And what's right in line with the 20-day is the September halfway back point between our all-time high that was set on September 2nd. That is our high for the month and our current all-time high, and our low for the month set on Friday at 44.27. Halfway back point there is 44.86 and change. So that is our target. If all we get in this bounce is to hear those calls are going to make a lot of money. We have the Fed on Wednesday releasing their statement. If there is a lot of talk of taper, or maybe no talk of taper at all, one way or the other, maybe the market is going to react to that on Wednesday, and we either continue the bounce or maybe we sell back off again and try to test the 50-day once again and this September low and see if we can find buyers there and then have that strong rally out of that. Or maybe the Fed spooks the market and we crash on down and we continue that move lower, as I just showed you, that full 6%, or at least the full part of that, the full movement of that range that we saw back earlier in the year. One way or the other, I think that there is going to be something for everybody to trade this week. Okay, so that's why, like I said, I put my money where my mouth is, and I bought some calls on Friday into the close as posted on Twitter. Here is my final thing that I want to show you is a daily chart of VIX futures. This is going back to where the market hit the low in July. You can see this was a huge breakout, a high for the VIX at 24.76, a move above the 200-day simple moving average. That's what the pink line is on all of my charts, is the 200-day simple moving average. So this was a look above it and fail, followed the next day by a move down in the VIX, the stabilization, and then a big rollover in the VIX. And obviously, the S&P 500 was doing the opposite of this. Here was, back at the end of August, we saw a move up in the VIX to a lower high, only 23.20, and then on Friday, and also a look above the 200-day simple moving average. This time, a close above it, but followed by a move down the next day. And then here on Friday, this big blast above the 200-day simple moving average on the VIX, a close above it once again, like we saw back here. No topping tail this time on the candle closing at the very high of the day, in fact. But what we want to see on Monday is for this high not to get taken out and for things to roll on over. And we'll get the benefit of using VIX futures tonight. We'll get that benefit of being able to see what's happening right off the open on Sunday night. Maybe the pajama traders are going to get us to push lower, but by 3 a.m. I think that when Europe opens and when the big boys come in trading their S&P special permit options from 3 a.m. on, 3 a.m. Eastern time, I think that we're going to see the VIX drop. I think we're going to see futures rise, and it's going to pull us into a gap up open on Monday, and it's going to trap in all of these shorts, and that's what's going to fuel that move higher, because it has done that every single time this year that we've come down to the 50-day. And especially on a Friday close below it, it has been a big buying opportunity. Okay, that's it. I hope this video helped you out. It gave you a good idea of what to expect on Monday. I will be tweeting all day on Monday, starting from the open till the close. On Tuesday and the rest of the week, my schedule is going to change again. I'm going to keep this video unlisted for Monday. I will make it public on Tuesday. That just means you got to use the link in the private Twitter account to watch it. And you can save that tweet or copy and paste that link somewhere so that you can find it later more easily. But I'll make this video public by Tuesday or Wednesday. Anyway, have a great rest of your Sunday. As always, good luck and good trading.